I'm sure wherever you go, they will be wanting to ask you one or two tips.
Do SIP, sab ichha ki purti. I borrowed money hoping that I'll become rich person. Obviously, that experience went into disaster. I lost all the money. India's most educated state, Kerala, spends more money on lottery than SIP.
Yes.
And Warren Buffett replied, because people don't have my patience. As per RBI's own record between FY21 to FY23, 93% of financial savings of Indian household moved into products like bank deposits, insurance, pensions, small savings, and currency notes.
We all know that we are still nowhere close to the global averages, which means a lot more of us Indians are going to be investing in mutual funds. Welcome to the Germinate Show. Like we always want to talk to people and introduce you to people that we believe are high trustworthy individuals. Now, we all know we want to be HNIs, that is the high net worth individuals, but we also have to remember we need high trustworthy individuals. And today I have one of them sitting with me. And this gentleman literally needs no introduction. He's a popular face. And I'm sure all of you have already heard him, seen him. And some of his short notes have gone viral. And we all are happy to hear him because he's that one voice that always assures us. He's that one calm, soft, gentle voice that reassures our conviction and makes us good long-term investors. I'm so glad that you're here with us today. I'm sure this episode is going to be one of the most viewed one because a lot of people want to hear from you. And I'm so glad that, we can have this chat. So thank you for joining us.
Thank you for inviting me. It's my pleasure.
So I want to begin on a journey that of so many years, we've seen the Indian mutual fund industry mature, over 20 years ago, the mutual fund industry was hardly 1 lakh crore. Today, we are at maybe 65 lakh crore. The industry now knows, or the market or the larger population knows what an SIP is, what an STP is, to a great extent even what an SWP is. So the awareness levels today are way better than what it was. Yet, I'm sure wherever you go, they will be wanting to ask you one or two tips on, so how do I make better? In such a case, I'm sure you must also feel a little surprised why they ask you. But is that one or two tips that whenever people ask you, in the airport or when you're traveling, they may ask you something. What is that one tip that you give to people when they randomly ask you?
So one, we have always talked about 4 things to people. One, income minus expenditure equal to savings is not right equation. Income minus savings equal to expenses is the more appropriate equation. Second, little drops of water will make an ocean. So be a regular investor. Third, don't put all eggs in one basket. Diversify yourself. And finally, be a long-term investor because mangoes cannot grow overnight. It takes 12 years for a mango tree to bear fruit. This is the thing we keep on repeating. And when people ask a guru mantra for financial security, I have always said, do SIP, sab ichha ki purti.
Well, I think that's what our nation does. And when you look at the month-on-month numbers, it's just so, encouraging to see that people have taken SIP literally and seriously. And I think we have to credit some of our viewers and even investors who are very disciplined about their SIPs. And I think, you also have seen those numbers. The other question that I want to ask you is maybe a bit more personal. You've been in the industry for over 2 decades and closer to 3 decades, and you today advocate so much of mutual funds, and you're also been in firms which are some of the largest and manage some great monies. But I want to know, if it's possible, your personal journey. Did you become a mutual fund investor because you were a portfolio manager yourself, or was the journey even before that? And did someone help you? What was the trigger that made a chartered accountant like you to even believe that we could do this? And why not shares when you started off? Any Your personal story there?
I have learned hard way. I was doing my articleship in the early 90s next to Dalal Street. And in the early 90s, there was a mad bull run. I thought making money is so simple. So not only I put whatever meager savings I had, I borrowed money,
Oh,
hoping that I'll become rich person. Obviously, that experience went into disaster. I lost all the money which I could not have afforded. And I had to work hard to overcome that. So my experience is just like a normal, ordinary investor of losing all the money at one go. And I'm really thankful to the God that He gave me that experience in the beginning. And on an amount which was very large at that point of time, but in today's term, it is meaningless. That incident really shook me, and then I started, trying to figure out what the world of investment is. I could have read books, but there was no money to buy books, and there were not many libraries in those days. There was no Google. So I had to go to people and learn from them. And one advice really came nice to me that beta in Dalal Street, Lakshmi Pujan happens only on Diwali day. Saraswati Pujan you have to do every day to make money. So then I realized that it is the knowledge which will differentiate vis-a-vis others. In the early days, I didn't have enough knowledge, so I went via mutual funds. I also dabbled in some stocks. And then over a period of time, mutual funds delivered such a good performance. And my career moved into mutual fund that I didn't have a lot of luxury to buy direct stock. But mutual fund has worked well for me.
Absolutely. I think it's for all of us, and that's the story. I think hearing your story reminds us also of a lot of stories. We all think we can get rich quickly. We all think that if we buy stocks, the stocks will go up, or we think that we can take higher risk than the general public. But I think the beautiful part of the story that you shared is true for everyone. I think it also goes back to what you said. Be careful about how much money you invest. Be mindful of your risk, and also diversify. And today, I think the benefit we have is we have enough history of a proven track record of how money can be made without us being actively involved in a good mutual fund.
So I guess for a large part of population, knowledge is no longer an issue.
Correct.
The problem is of wisdom. Then you go and try your luck in FNO. You lose money. Then someone tells buy bitcoins and NFTs and other cryptos. A lot of people lose money, some make money. Then people go and do Ponzi schemes. They lose money invariably. Then people go into lottery hoping that mera lottery lag jayega. Now, India's most educated state, Kerala, spends more money on lottery than SIP.
Yes.
Or direct equity purchase. I mean, isn't it common sense that the lottery buyer starts making money, lottery seller will shut the shop? But we all have to control our Duryodhan. And in this Kali Yuga, Sri Krishna is not going to cuff. So you'll have to control Duryodhan either on your own knowledge or you take help of an advisor who can guide you towards your financial security.
So I think you made a nice point there that knowledge and awareness today is plenty. We all know how funds work. We all know long-term works. We all know SIP is literally magical for someone who's starting off and wants to build wealth slowly and seriously over a long time. Yet, we notice there are some investors who drop off the way. They drop off half the way and they also want to change funds. It's like even the SIP that they do, every 2-3 years, they want to figure out whether they want to change the scheme or change the structure. It's in a way okay if their disposition or risk appetite has changed, but they want to chase performance as much as we advocate that, stay in for the long term. In fact, the recent flow of investors tell us that even though the number of investors are increasing, the average holding period is not increasing. That means I really doubt if an investor at an aggregate level has got more than 12 or 15 months staying period. because monies are being made, but are everybody making money is the big question mark. Now, I think all of us, we have a responsibility to help people manage this. Still, it's a challenge. And like what you rightly said, we know the steps to make money, but not everybody is able to encash it. And the few people who are willing to stay and encash, they're the ones who make the money. In our parlance, we categorize the investor saying is HNI. We think as much as an HNI is important, we also need a HTI, a high trustworthy individual, an individual like yourself that can not only give them good opportunities to invest, but we also need to give them guidance, the conviction to stay, the conviction to think long term. Now, Amphi's done a lot of work in that space, and I think today, thanks to the work that Amphi's done with the cricketers and celebrities being a part of the whole campaign, we have now got this whole mutual fund Sahi Hai campaign so beautifully well. Yet, I think there are a lot of gaps in terms of how people perceive it. What do you think we can do to further? I'm sure there must be some thoughts that you have.
So, many years when I started my career in Templeton, the founder of Templeton, Mr. Charles Johnson, had come and he said, mutual fund industry is like a bamboo tree. You keep on working, and you wouldn't see anything. And then one day, bamboo tree will go to sky. I think we are in that stage when we just have to keep on doing what is right. And eventually, bamboo tree will go to sky. Someone asked Warren Buffett that so many things have been written about you. You are a public figure. You disclose your strategies every year in a mega EGM. And yet there is no one else like you. So is there some trick which you have kept it with you and not shared with others? Warren Buffett said, no, I have shared everything. There's nothing
Hidden.
dirty secret or a hidden secret. There's no secret with me. I've shared my knowledge, wisdom with everyone. Then the interviewer asked, then why is there no second Warren Buffett? And Warren Buffett replied, because people don't have my patience. If we see Warren Buffett's wealth, a large portion has been built after 60 years, 70 years. Because he had patience, he has become Warren Buffett. Most investors lack the patience. The second challenge is, the greed. There are many investors who, invested in 2017 or now because the past returns were looking good. And they have come with the expectation that next 3 months I'll make money. Now there is a difference between T20 and test match. You can't play like T20 in a test match. Yes, once in a while you can play a shot like T20 to score runs in test match, but test match temperament is totally different. So that balance between greed and fear is also important. Now, can someone come and teach you how to balance between greed and fear? People can guide you, but finally it is you who have to accept it and execute it. And one big problem with people is that they are not true to themselves. When market is bullish, everyone believes they are risk taker. On a betting pitch, everyone thinks I can play T20 game. On a bowling pitch, they all want to play a test match. This lying to yourself about your risk appetite is also one of the reasons why people become short-term investors rather than long-term investors. I'll give you 2 examples of how people should be fair to themselves. In COVID time, a colleague of mine called up saying that, Nilesh, will you speak to my doctor? He's on another line. I said, what is the problem? So he said he wants to sell everything and move into fixed deposit. I thought he should speak to you. So I spoke to this gentleman for the first time. I had no idea who he was. And he said, look, stock market is correcting. My mutual fund portfolio, my stocks portfolio has fallen. I'm a doctor, I earn well. And this kind of losses disturbs my sleep. I'm unable to sleep peacefully at night. Your friend had called for a consultation, so I told him, sell all of my portfolios, move into Bank FD. At least I will sleep peacefully. Now, what do you go and tell a doctor whom you are speaking for the first time, whom you haven't seen? In a time like COVID, you were worried about your life. What will you go and tell? So I repeated the standard stuff. Sir, let's wait for 3-4 months. We'll see what happens after that. Right now, it's not a good time to sell because there's so much of fear. Hopefully, in 2-3 months, some medicine will come out for COVID. Life will go back to normal. Obviously, he did listen to me and sold everything. In about 3-4 months, his phone call came back saying that markets have delivered more return in this 3-4 months than what FD would have delivered over 3 years. Now, what should I do? In my heart, I wanted to say, so you should sleep peacefully. You are not here to make money. You wanted to sleep peacefully. Now, FD is giving you that peaceful sleep. But that would not have been the right answer. So I asked him, like, sir, how did you pick up stocks, mutual funds? He said, patients came and they told me and I picked up. No patient is stupid enough to ensure that his doctor loses money. No one will take that risk. So everyone wanted his doctor to make money, so they gave him high risk, high return idea. Risk came during COVID and his sleep deviated. Much later, I realized that for him the loss was whatever was the high minus the current price.
Not the capital.
When he bought and current prices. Now, this I realized much later on. So there was a fundamental issue also about what he considered loss. But the reality is that the gentleman was very, very conservative investor. He needed a person who can handhold him, who can explain that it's not the last NAB minus current price, it is the cost minus current price, which is your profit. So I advised one IFA to connect with him, and so far he hasn't called me except for wishing Diwali and stuff like that. So I'm sure he is doing well. You were conservative investor and you moved into aggression, and at the wrong time you exited. Obviously, it didn't work for you. Bang opposite of the story I have heard. I have never met this lady, but somewhere in North India, a 75-year-old widow had invested in debt and hybrid funds. She was working woman for a bulk of her life, and then she had some inheritance from the husband. Somewhere in COVID, she called up her distributor saying that I want to shift everything from debt into equity. Distributor was shocked, saying that, are you sure you want to do it? And she said, हाँ बेटा, अब रिस्क नहीं लूंगी तो कब लें? जान का भरोसा नहीं है तो मार्केट में जोखिम ले लेते हैं. Obviously, that lady is up 3-4 times in last 4-5 years. She has made far more money than what she earned, including inheritance, in first 75 years of her life.
Excellent.
And many a times people said, this age, money doesn't matter, it's the relationship. Well, she has far more relatives today than when 5 years back. तो पैसा और relationship दोनों बन गए हो. Now, just see the difference between a medical professional and an old lady. One took the right call and bet big when she was confident. One took exactly opposite call. I think the old lady was a risk taker and she was rewarded. Of course, she had a good advisor also who could execute what she wanted. So my recommendation is that while MFI, mutual funds, media, distributors are doing their work, you also have to take responsibility of your financial security.
Well said, sir.
I am spending so much time on investor education because I work in mutual fund. If I was something else, would I have done this kind of job? Answer is probably no. So my selfish interest in promoting investor education, investor awareness is to make them investor for mutual fund. and hopefully Kotak Mutual Fund. Other than your parent, no one is interested in your well-being. Otherwise, there is a commercial relationship. Hence, you should be aware about your financial need, your need for financial security. Be fair to yourself, recognize what is your risk appetite. And if you can manage, so be it. Otherwise, please take help of a good advisor, good distributor. And with discipline, follow the financial plan. If we look at today's India, as per RBI's own record between FY21 to FY23, 93% of financial savings of Indian household moved into products like bank deposits, insurance, pensions, small savings, and currency notes. That's going to give below inflation rate.
Correct.
Only 7% moved into real return product, mutual funds and direct equities and capital market instruments. We all want to run marathon of financial security, but we want to use only 7% of our lung. 93% nahi use kare. You can't run a sprint also, forget marathon. And this is FY21 to FY23 when markets have done so well. So clearly, everyone has to take responsibility for their own financial freedom. And then leverage what MFI advertisements are, what mutual fund advertisements are, materials are. Consult good advisor. I'm sure we can secure every Indian's financial freedom if there is a meeting of the minds in between. Thoda steps bole, thoda hum
Correctly. Now let's move on and talk about this whole worry about people saying that markets are overvalued or markets have run up too much. Every 2 to 3 years this story comes up, and this usually comes up when the first sign of small correction comes in. Usually when the market's going up, even your neighbor will tell you, we have to put money in the market. And when the markets are going down, they say, no, market is bad. But I'm talking about a new phenomena here where everything is good till it's going up. The first sign of small, like you said, the road turbulence. Yes. Now, I think here again is a mindset issue. You have some thoughts on that?
So when I started my career in market, I thought I knew everything. And, few successful trade gives you that ego. That now I know exactly when to buy, when to sell. And then market makes you humble because you fail miserably. So fortunately for me, I got that learning partly from my own experience and partly from my seniors who taught me that market is bigger than all of us. Don't try to predict market. Your job is to analyze, put position, and if market goes other way, you reanalyze and adjust your position. You will always remember that market is bigger than you and you are student of the market, not master of the market. Over the years, whenever I have forgotten that lesson, market has reinforced it very, very heavily.
You got a special class.
हाँ मतलब जोर से पिटाई होती है तो you go back to your basics कि हाँ ये सीखा था. Whether markets are undervalued, overvalued, that directionally you can sense. But is this the top or the bottom? You'll never be able to figure out. And to all investors, I say, please follow the practice of asset allocation. So use commonsensical thing to figure out what to buy and when to buy and how much to buy.
There again, I think you made it so easy for investors to worry about where the markets are heading and what to do in a high market or a low market by, giving the whole explanation of balanced advantage funds. I wish we all can be like you, Nilesh, by that you view life so, from a broad spectrum that you could learn from anyone. And most of our learnings are our experiences and us gleaning away from the greats that were there before us. Sometimes when you become successful and when you're a long-term investor, we think that our formula works or we think that we are right or we've arrived. But I think you're just that the example that you gave proves the point that learning can be unending and it doesn't have to also be experienced or age-wise. Sometimes there are people who can just do things way better.
I want to share one more experience. Please. Learning is so critical. in one of my mutual fund, we had built a very large position in one newspaper company. And we were in love with the stock because it had delivered us great return. It had many other very good marquee investors, and we were in love with the company. One day, an analyst called me up saying that this company's numbers are doubtful. My first reaction, अरे तू पागल हो गया है, इतना अच्छा कंपनी है, चल फोन रखते. I'm so thankful to that analyst. He came to my cabin without appointment and said, I want to meet for 5 minutes. Some luck pushed me to meet him. And he said, Nilesh bhai, these are the 7 days newspaper. This is the average advertising in that 7 days newspaper. These are the numbers as per their annual report of advertising revenue. This average advertisement space and that revenue, that means they are charging more than Times of India is charging in Mumbai. Now, if you believe they have ability to charge, stay invested. If not, ask questions. Obviously, that was an eye-opener. Instead of 7 days, we did that analysis over 30 days. The conclusion was the same. We exited that stock. We exited that stock with a lot of profit. People who bought from us got checked. Now, all credit to this analyst who did, number one, that analysis, which I should have done. And second, he kind of pursued
his conviction,
share his viewpoint. This is why you have to be open, you have to listen to all. Suniye sabki, kariye apni, but keep your eyes and ears open because you never know where is your blind spot.
So we're so glad that's exactly what we want to do with this. That you heard so much just now from Nilesh bhai, and yet so much wisdom being shared. The responsibility lies with us in terms of what we do with the knowledge and the information we have. See, today we live in a time where there's so much information. There are so many people that can help us out. Yet the onus lies with us to make it work for us. With our Indian mutual fund industry coming of age today at over 65 lakh crore investments, and I think the live folios are over 5 crore, we all know that we are still nowhere close to the global averages, which means a lot more of us Indians are going to be investing in mutual funds. Where do you see the gaps? Is it knowledge or is it products, or why is that there's almost a high 40-50% in developed worlds, whereas in India, like you said, the RBI data is less than 10%. And your thoughts on that?
So one, we all believe investment decisions are rational. No, they are emotional. So we are dealing with something which is emotional. Second, many a times we believe that because my product is the best, it should sell on its own. Well, there is a need for distribution system. There's a need for branding and advertising. There's a need of gaining consumer trust even if your product is the best.
Correct.
If we put all these things together, can I build trust of investors overnight? Answer is no. You have to work for decades to build that trust. Once that trust comes, money will follow. If I have your mind share and trust, your pocket share will come to me one day. But if I don't have your trust and you have shared your pocket with me, how long it will last?
Yes.
So as mutual fund industry, most importantly, we have to build our trust. We have built trust with 5 crore investors. It needs to go to 50 crore investors. We are today English-speaking urban phenomena. We have to become regional language focused semi-urban and rural phenomena. Not that we haven't started this, but a long distance has to be covered. The second thing is educating investors. Mutual Fund Sahi Hai campaign, SEBI's investor awareness program, they are all making an impact. But there is a need for a sun and we are all lighting candles. One day enough candles will be lighted so that there will be no need for sun. But, we need to light candles. Third thing, is the need to build distribution channel. Many a times we feel that my product is needed, people will come to me. But there is emotion involved. We need someone who can manage emotion.
Absolutely.
Now we have 300,000 individuals, EUIN numbers, which are selling mutual funds, but there are 25 lakhs in insurance. So if I need to go from 5 crore investors to 50 crore, I need to scale up my distribution. So I think it's a combination of all. The regulator has their role, mutual fund industry has their role, investor has their role, and distribution has that role. This juggernaut has to keep on rolling. And we have to keep on doing what we are doing for years so that one day the bamboo tree goes and touches the sky.
So I'm sure the people hearing will benefit, but I think I'm going to make notes of what you just said because I'm in the same business right now, helping a set of people save and invest and manage their money, and even more to stay through the course to to get the benefit of what the funds deliver. So I think I'm going to benefit from what you said to ensure that I also grow a lot of these bamboo trees so that over a period of time people make money and we also grow our business. Sitting here in Bangalore, we're known as the tech hub. Sitting at Mumbai, we are the financial services hub. In fact, most activities done over there. That's the one more aspect about India. You have pockets of super zones. Like Bangalore is great for tech. Not that other cities are not. They're catching up. Mumbai is again great for all financial services activity. Do you think that as we progress as a nation with the large population like ours, we will see a kind of a Mumbai equivalent in terms of financial nerve centers in other parts of the country?
So if we look at India's GDP, about 13 districts contributes half of India's GDP. And rest half is contributed by 692 districts. There is huge unevenness in growth. Now, wealth is not necessarily GDP, but same thumb rule will apply. As this wealth starts percolating, as this growth starts percolating, there will be need for more and more tech hubs, more and more financial hubs, more and more industrial hubs. In US, we have seen large companies leading that. So Microsoft is in Seattle, Amazon is also in Seattle. Some will be in California, some will be in, Omaha and so on and so forth. In our case also, regional hubs will be driven by large corporations. Today, most of our corporations are in the urban areas. But if we look at Zoho, Sridhar Vembu's company, it's coming out of a village. That kind of model can create many multiple hubs. In technology, it may be a bit difficult, but in financial, it will be much, much easier. Because with the technology, the connectivity has improved, platforms and pipelines can function. And hence my feeling is that we will see many more financial hubs emerging. Obviously, Mumbai will remain the leader, but there will be many more financial hubs which will emerge, which will then get connected to Mumbai via pipes and platforms. So touch and feel is important. Today, many people trust bank because it is visible. You have connect with the branch manager, and mutual fund do face a challenge. Our branches are on third and fourth floor, not on the ground floor. Our managers are not as much visible to customers as a bank branch employee. So undoubtedly, our model is neither going to be full physical, full digital. It will be blend of physical and digital, where there is human touch where needed, and there is technology reducing cost and bringing scale and efficiency.
We are now seeing some media reports and some visible signs that the Indian middle class is shrinking, which is the rich are getting richer, of course. The poorer are struggling sometimes to make ends meet. But usually the middle class was somehow getting by. They were able to make ends meet. And at sometimes when the earnings calls have come and some media reports have come, they're saying that, that the Indian middle class is shrinking. Now, technically, if the middle class is shrinking, either they have to become rich or they have to become poor. You must be having some thoughts and data on this.
So India is such a large country that whatever I say, opposite will also. But let me turn that question other way around. Why is middle class shrinking? And why are rich becoming richer? A thumb rule is that if your allocation is towards assets which give real return, you will become richer.
Hmm.
What will be allocation of rich people? Primarily towards equity. What will be allocation of middle class? Primarily towards fixed income. Rich are becoming richer because they are following wise investment practice. Middle class is remaining middle because they are not following appropriate asset allocation. 10 crore Indians have traded in cryptos. Majority would have lost money. 18 crore Indians play games hoping that it will give them financial freedom. Majority of them end up losing, otherwise gaming company will shut down. 2 crore Indians have invested in Ponzi. Many years ago, there was a company called Punjab Agrotech Corporation Limited that apparently collected some 60,000 crore. When the largest mutual fund would not have been of that size, they will give money because they thought money will double. NFTs. There are people who have invested and lost money. In FNO, how many people trade and lose money? Lottery buying, betting on IPL and cricket matches. There's a whole host of Indians which is lining up to lose money. They don't want to invest appropriately, wisely, smartly. They want to become rich overnight. And hence they end up losing monies in cryptos, Ponzi schemes, FNO trading, lottery, NFTs, and so many other.
I think that's a brilliant perspective. So there is a chance for middle class to actually scale up and become the upper middle class or the rich. But thanks to some of the wrong decisions they do, and I think that comes back to what you said, you should take ownership about what you do eventually. And the FNO data also is quite stark that over 95% of the people lose money, and that number runs into several lakh crores. And therefore, there's a reasonable reason to believe why the middle class is shrinking and becoming poor. And the small percentage of middle class which is actually investing into real assets that grow are actually moving up the ladder. So I think there's a very clear message that I must thank you for sharing this perspective about how there is a misplaced objectives of where money can be made while we miss the opportunity of how money is actually being made. So I must thank Nilesh Bhai for taking time. And I think the highlight of all that you'll be hearing is that how he uses day-to-day simple, down-to-earth examples that all of us can understand. And more than understand, it leaves you that you want to do something more and you want to do something right. And I think this episode especially goes down to say that there's never a question of opportunity or the potential to make money. It's always about what we can do to seize that opportunity. Nilesh bhai, thank you so much. It's an enriching experience, I'm sure, for the audience, but I go back enriched too. And I thank you for talking to us.
Thank you, Santosh, for having me over here.